Hello, good morning. Ladies and gentlemen, good morning to you. I'm so excited to be with you here this morning. Happy Friday to everyone. So let's confirm that we are good to go this morning. So I would like to see some feedbacks in the comment section, helping me to know that you can see my screen and you can hear my voice clearly. So just type in hi. This will give me a positive feedback that we are good to go. Type in hi in the comment section, please, and let's see how it goes from here. So let's see what we have in the comment section. I'm not sure. Give me a moment, please. Let me try to load up my comment section. Okay. All right. I can see my comments now. Okay, thank you very much. Happy, good morning to you, Happy. RSO, all right, thank you. Hey, Carrie, how are you doing this morning? Good morning to you. Happy Friday from here too. All right, so I'll take this as a positive feedback that we are good to go this morning. So on this note, I welcome you all to yet another promising session on the X Trend Speed Live. My name is Sheriff Daramola, and for the next 1 hour, we shall be examining past price patterns and market behaviors, recurring trends, support and resistance levels to gain an insight into the situation of the current market structure. And by the end of this video, by the end of the session, you would have digested a whole lot of data that will eventually help you in making a well-informed and independent trading decision ahead of the New York session today. And for those who are joining us for the first time, you are highly welcome on board. And what we simply do here is to gather here as a community in ahead of the New York session to review our existing positions while we also look out for more opportunities during the New York session. So you are welcome and glad to have you around. So today is the last trading day of the week. It's Friday, and we all know what really happens on Friday, where majority in the market are likely going to be doing some profit-taking activities, which will reflect on the chart as price action moving in the opposite direction of where price has been going since the beginning of the week. So we are going to be taking all this perspective into consideration while we review our current position. So with that being said, let's dive right into the business for today. And you know how we do it. The first thing we want to be doing is to check the economic calendar. As you all know, the U.S. Bureau of Labor Statistics is going to be releasing the jobs report for the month of May in about an hour or so. And this is a very high impact event that everyone in the market we'll be looking forward to. And this data always presents us with a number of new jobs created during the month of the previous month in all non-agricultural businesses. And from the previous data we have here, we have 253,000 as against the consensus projection of 190,000. And as you can see here, it shows that though we have a job growth for this month, but it's still lower than the previous month, which is a little bit on the downside. So we are going to be looking forward to what the actual data is going to be like. Is it going to be just as expected, below expectation, or probably beyond expectation? So we are going to be anticipating this, and don't forget that the Federal Reserve too also will be looking forward to this event, as it will be one of the major factors that will be determining if there's going to be a rate hike next week or not. And another thing that is going on in the market right now is this general consensus that there is likelihood that the interest rate might not be increased next month due to the economic data that came in from the US yesterday, which was not really favorable. So we are going to be looking at that from a technical standpoint. So with the information we have gathered here on the economic calendar, let's dive right into the chart and let's see what is really going on at this point. So the first commodity we are going to be taking this morning is going to be the US oil spot as usual. And on the US oil spot, I'm so excited to tell you here that we have been quite profitable since the beginning of the week on this commodity. So see what happened here at the beginning of the week. We sold the US oil spot as soon as price action broke down that our support line, which was also serving as our key level at the beginning of the week, and that was situated at around the $73 area. And as you can see here, since the beginning of the week, we saw our price action continued to trade below that structure, and we were opportune to add more position as price action broke down key structures, and we continue to ride the move all the way to the downside. So congrats to everyone who had been part of this bearish move. And during our live session yesterday, this was what we looked at during our live session. So we acknowledge that despite the very strong impulsive move that brought price to the downside around that $67.50 area, we begin to see how buyers continue to negate that bearish pressure at that point. And this led us into expecting that we might likely be seeing a reversal pattern gradually unfolding. And what we said here is that we are going to be using the $69 area as a yardstick to take advantage of a bullish momentum if price action ever breaks out of this level. And coupled with the fact that a breakout of that structure also would have broken out of the trend line that we identified here. And look at what happened. I think a couple of hours into the New York session yesterday, we saw the breakout of structure, which triggered our buy position. And remember, we also had a buy stop order above the $69.80 area to also trigger another wave of bullish opportunity. And currently, we are running with over 200 pips in profit on the US oil spot for in the last 24 hours. And if we look at the second position we took advantage of here at the breakout of the $69.80 level, you will see that that one also is running with about 130 pips. So in total, we have a maximum of over 300 pips running in profit on the US oil spot so far the last 24 hours. And for those who are taking advantage of these opportunities, well done to you for being on standby to have taken advantage of that move. And if you still have your buy position running at this point, you know how we do it. The next thing we want to be doing right now is to move all our stop losses to secure this current position, as we don't want to lose out on whatever we have. And at the same time, we want to give room for price action to breathe, hoping that price action will still continue to the upside. So the most appropriate area to have our stop loss at this point is that area between the $70.40 and the $70 area. So this is what we are going to be. This is the area where we should be placing our stop losses at this point, and we hope that price action will continue to the upside. So once again, well done to you for being on standby to have caught that move. So now our next line of action right now is to get prepared for the New York session. And what do we want to see on this chart that will make us to either continue buying or get ready to sell the US oil spot for today? But the first thing I would like us to first of all look at is what has really been going on here from an holistic standpoint. And if we want to do that correctly, we want to zoom out on this chart, and this is what I want us to acknowledge here first of all, and that is the fact that the $71 area where price action is currently trading had been a major determinant of price action in the past. And if we go to as far back, hold on a second, if we go to as far back as the mid-month of May, we saw how that $71 level has been serving as a very strong demand zone in this market. So we saw that level serving as a demand zone before price action broke down that structure during the course of this week. And with this situation and looking at it from a technical standpoint, we expect that as soon as price action breaks down a key structure like this, we expect that one point in time price is likely going to come back and do a retest of that structure in anticipation of another wave of bearish momentum to the downside. But it's not all the time this kind of technical structures happen. So what we are going to be doing here, hold on a second please, I'm trying to, okay. So what we are going to be doing here is to focus our attention around that $71 area to see how price action is going to be reacting to that level to determine if it's going to be retesting that structure to incite another bearish momentum to the downside, or if it's going to break out that level to incite an opportunity to buy the US oil spot. So in that regard, I'm going to be zooming in right now into where our center of focus is going to be for today, and that is between the $71 level, which happens to be a very strong support line during the course of last month, and the $70 area, where you can see price action has been choppy since price action tested that level during the New York session yesterday. So we saw how price action was ranging between the $71 area and the $70 level. And you know how we do it whenever we have this kind of simple setup. We want to wait patiently for price action to give us an opportunity to either buy if it breaks out of the resistance line, which is at the $71 level in this case scenario, or the breakdown of the support line, which is at the $70 area for this case scenario here. And one thing I did this morning when I observed this whole simple setup here was to place my buy stop order above the $71 area, and I had my position triggered, and as you can see, price action moved about how many pips? About 40-50 pips in my favor. Immediately I moved my stop loss to break even, and at this point in time I have been taken out of my position. So what we are going to be doing right here is to remain patient to see how price action will be reacting to the $71 area. So the first thing I want to look at here is the potentials that buyers could take over this market, and the reason why I'm going to be considering the buyer's potential first of all is simply because of this bullish candle that happened a couple of hours ago. And if you look at the nature of that candle, it's looking like an hammer candle, which from a technical standpoint is an indicator of buyer's presence around this area. So what I'm going to be looking out for here is to see a breakout retest of the structure to give me an opportunity to buy at this point. Now that we already have a breakout of structure, we are going to be looking out for a retest of this level of the $71 area today, and to do that right now we will need to scale down into a much more lower time frame like the 15 minutes time frame to identify a pattern that will support a trend continuation to the upside. So we want to be looking out for something like double bottom structures, head and shoulder patterns, or even falling wedge to catch that move to the upside. So scaling down into my 1 hour time frame here, this is what we can see on the 15 minutes time frame. We are on the 15 minutes time frame right now, and like I said earlier, I want to see something like double bottom structures, head and shoulder patterns, signs that buyers are trying to push price to the upside here for me to join. And what I did on the 15 minutes time frame here was to acknowledge this bullish, these higher lows here. So if I bring out my line chart at this point and connect the series of higher lows, we have a trend line to work with for today. So what this simply means is that as long as price action remains above this trend line, we feel comfortable in our buy position and look out for more opportunities to buy the US oil spot. And with the situation we have here, it appears that price action remains above this key level at the $71 area and still above our trend line at this point. Hold on a second, please. Give me a moment. All right, sorry for the broken transmission. So what we are going to be looking out for here is that price action should remain above that trend line. Let me thicken this trend line a little bit so that we can see things more clearly, as this is going to be our center of focus for today. So as long as price action remains above that trend line, we feel comfortable in our buy position and look out for more opportunities. So what I'm saying here is that we already have a breakout of structure. So I want to see something like a reversal pattern around this area. Then I want to be part of the trend continuation to the upside. And if price action continues in such a way that it breaks out of the $71.50 or 60-cent area, somewhere right here, we want to be adding more position to our existing trade. So let me label this so that we can mark it out on our charts and use it as a reference point when we are about to make our independent decision. So we have the $71.60 area also as a yardstick to add more buy position to our existing trade. So this is how we are going to be buying the US oil spot today. Anywhere above the trend line and above the $71 level seems most appropriate to look out for buying opportunity. Now, if we are going to be selling the US oil spot, well, I want to see price action break down this trend line. And I want to see something like this. And remember, we are not getting too excited here, as we still need some confirmation to affirm that this trend line has really been breached. So we want to scale down into our lower time frame. It could be the 5 minutes, 10 minutes, or even 3 minutes time frame to look out for retest of the structure. Where continued selling pressure below this area will now confirm that we can now sell the US oil spot. Then if that happens and price action continues to the downside, we should have a sell stop order below the $70 area to add more position to our existing trade. So this is how we are going to be trading the US oil spot today. So we have two key parameters here that will guide our trading activity, and the first one here is this bullish trend line, which you can see on your screen right now, and the second one is this key level at the $71 area, where if price action remains above both of the structures, we look out for buying opportunities. But if price action drops below the structures with continued selling pressure, then definitely we want to be getting ready to sell the US oil spot. So if you have any questions regarding what I just explained and you need me to do further clarifications, feel free to let me know in the comment section. I will be checking the comment section from time to time to see if there are any questions for me. So I will be moving on to the next instrument, which is the USTech100. On the USTech100, this is a very, very profitable trade for us since the beginning of the week on the USTech100. Remember, we bought at one point, we sold at one point as well, and in the last 24 hours, we had a massive buy here, giving us about minimum of 3 positions as we rode the move all the way into that 14,500 level at this point. So before we go into the details, let's quickly run through how the week started for us on the USTech100. So at the beginning of the week, we captured a range where price action was trading in between, and this was between the 14,415 level and the 14,350 area. And with this whole situation here, we know how we do it. We know what we expect whenever we sight a flat channel like this. We want to see price action either break down the support line to give us an opportunity to sell, or we look out for a breakout of the resistance line to give us an opportunity to buy. And in fact, we had the breakout happen on Monday, which moved about 100 pips in our favor before this bearish momentum began to break down the support line. And it was at this point we started selling the USTech100. So we sold all the way into this zone here at the 14,230. And mind you, we also had multiple entries as we kept on adding more sell positions at the breakdown of key structures. And in fact, the trend line was very, very helpful in helping us to guide this bearish momentum throughout the course of this week. So it was initially bearish during the first half of the week, and during our live session yesterday, we acknowledged that price action has been finding it difficult to break down the 14,230 $230 areas, and this gives us a sign that sellers might likely be losing the momentum that started the week, and with the continued buy pressure, the continued rejection of the zone here, we anticipated that there is a chance that price action could climb to the upside. And what we did here was to position ourselves in such a way that we can capture that move. And in order to do this, what we did here was to identify this $14,275 area, that green line on your screen, and that line was serving as the neckline of this reversal pattern. And one interesting thing about that key level is the fact that it also shares a confluence with a bearish trend line that has been supporting the bearish momentum since the beginning of this week. And what we said here is that if price action breaks out of both of the structure and do a retest of that level, we are going to be buying the USTech100, and this was exactly what happened. I think a couple of hours into the New York session, we saw a bullish position triggered, and since then price action had been going to the upside. And if you had followed the instruction we agreed on here yesterday, remember we said we have a buy stop order at the 14,300 to add more position, and we also had a buy stop order above the $14,350 level to add more position to our existing trade. And since then, price action has moved significantly well. At least on the first position, price has moved over 250 pips in profit, while the second position here has moved over 200, and the third position at the breakout of the 14,350 has moved over 150. So we have close to 600 pips in profit if you are taking advantage of all the multiple entries we identified during our live session yesterday. So congrats to everyone who has been part of this profitable trade. And for those who still have a buy position running at this point, well, you know how we do it. The next thing we want to be doing right now is to secure all the buy positions by moving all our stop losses on all positions to a certain level to secure the current position we are in. And from the look of things right here, I'm suggesting that anywhere below the $14,480 area seems most appropriate to move all stop losses to. And let's see how price action will play out in the next couple of hours to decide what our next line of action will be. So once again, congratulations to you guys. Now, going into the New York session today, what is our plans? What do we intend to do? Are we going to continue buying the USTech100, or are we going to get ready to sell the USTech100? Well, before we can go into the details of what to look out for here today, I want us to scale up into a much more higher time frame, like the 4 hours time frame, to see what is really going on from an holistic point of view, after which we shall be coming back here to make an informed decision ahead of the New York session. So right here, this is the 4 hours time frame, and if you were with me since the beginning of this week, you would remember that we acknowledged the fact that price action has been bullish since the beginning of this month, of the month of May. And to further affirm this bullish momentum, we connected a series of higher highs and higher lows, which has given us this simple ascending channel you see on your screen right now. And something interesting happened during the later part of last week, Friday to be specific. We saw price action break out of the resistant line of that ascending channel to signal the strength of the buyers in this market. And following the breakout of that structure, you saw what happened. You know, from a technical standpoint, whenever price action breaks out of a key structure like this, we expect that one point in time price will come back to retest that structure to incite another wave of bullish momentum. And this was exactly what we projected during our live session yesterday, after identifying the continued buy pressure just right above the resistant line of that ascending channel. And we said here that a breakout of the 14,300 will further confirm the strength of the buyers. And as you can see, let's zoom right in so that we can see things more clearly here. So you can see what has been happening here, and since the last 18 hours now, you will see that price action is back at a very important area, which is at the 14,000. Let's see how many. 14,530. So let's label this area for the sake of clarity. So we have the 14,530 level right here, and let's give this a blue color. So we are going to be using this level as a yardstick to guide our trading activity for today. So right now price is back at that area. So what we are going to be doing here is to see how price action will be reacting to this level. So if we start seeing selling pressure below the structure on our lower time frame, that is price action finds it difficult to break out this level, then we are likely going to be considering selling the USTech100 today. However, if price action breaks out of the 14,530 and we buy pressure, then this will affirm that buyers are still very, very strong at this juncture in the market. So in order to identify and understand what is really going on here, we want to scale down into the lower time frame so that we can have a better perspective into this current structure. So scaling down into the 1 hour time frame, this was what I was able to identify here this morning, which also helped me to add one more buy position to my existing trade. And this was what I saw here. So I saw here this morning that price action was initially ranging till about 8 a.m. UTC today, where price action was caught within the 14,480 and the 14,440 to emphasize the level of indecision in this market at this point. And what I did here when identified the structure was to have a buy stop order above the resistance line to capture that move to the upside. And since then, price action has moved. And for those who took advantage of this opportunity, well done to you, as you will currently be running with an additional 37 pips in profit. If you had that to your previous position, well, you will be quite close to about 700 pips on this one. So the next thing to do here is to move your stop loss on this one to protect this buy position at the entry point. So now that we have this whole situation sorted out, what is going to be our next line of action? And like I projected on the 4 hours time frame, we want to see how price action will be reacting to that 14,530. So continued selling pressure around that area might likely incite a sell-off. So if we start seeing continued selling pressure like a reversal pattern, then we want to be part of a bearish move at the breakdown retest of the neckline of that reversal pattern. But if price action breaks out of the 14,530, continued buy pressure above the structure, then definitely we are going to be in for another wave of bullish momentum to the upside. So let's be on standby to capture these opportunities on the USTech100. And please, for those who are still in a buy position on this instrument, kindly move all stop losses to secure current position while we wait out for more opportunities to trade the USTech100 for today. So these are my views here on the USTech100. If you have any questions, feel free to let me know right in the comment section. So with that being said here, I will be moving on to the next instrument, which is also the GBPUSD. Another profitable trade for us on the GBPUSD in the last 24 hours. In fact, we have been very profitable on all of the pairs we have been monitoring so far this week. Now, look at what we have here on the GBPUSD. Since the beginning of the week, at no point did we sell the GBPUSD, as we continue to see how price action had continued to find higher highs and higher lows. And look at the structure we have here at the beginning of the week. Remember, we identified this choppy situation where price action was initially ranging between the 1.23580 and our key level had the 1.23400 area. And with this situation here, we agreed that if a breakout of the resistance line happens, we are going to be buying the GBPUSD. And since then, we have been buying. Price action moved significantly well. So we had a first move here where price moved over 80 pips in our favor, and then we had a second move here, yes, on on Wednesday, where price action also moved over 70 pips in our favor. And during our live session yesterday, I told us all, after we identified the strong selling niche around the 1.245, we said we are going to be having a buy stop order above the 1.245 to capture this trend continuation to the upside. And look at what we have here. Price action moves significantly well, going right to hit our TP target at the 1.254, giving us about another 90 pips to our kitty. Now, with the situation we have here, first of all, I would like to congratulate everyone who has been part of this profitable trade. Now, for this situation we have here, heading into the New York session today, what is going to be our plans and how do we intend to take advantage of a potential trading opportunity today? Now, if you look at the whole structure here, since price action hits the TP target at the 1.25400 area, we have seen price action fall into a choppy situation. So it has been ranging between the 1.254 and the 1.252 since the later part of the New York session, to emphasize the level of indecision at this point. And this is well connected. This is likely connected to the anticipation of the NFP data coming up later on today, as majority are waiting. Key players have stepped aside from the market, waiting for a catalyst that will drive price movement. So we also want to be waiting patiently for our structures to mature before joining any potential opportunity here. And you know how we do it. Whenever we identify simple setups like this kind of flat channel, we want to wait patiently for either a breakout of the resistance line to give us an opportunity to buy, or we wait for price action to break down the support line to give us an opportunity to sell. So with the situation we have here, let's just first of all talk about the potentials that the sellers have here. And the reason why we shall consider the potentials of the sellers here is simply because of what I saw on the 4 hours time frame. So let's go into the 4 hours time frame here quickly, and let's look at this from an holistic point of view. Now, on the 4 hours time frame, you will see the whole choppy situation we have been witnessing here in the last 24 hours. And if we compare this with what has happened around this level in the past, you will see how that area also has been a strong selling niche in this market. Look at what happened here in the month of May. We saw that as soon as price got into that area, we saw strong selling pressure pushing price to the downside. And in fact, if we go to as far back as the month of April too as well, we will see something like that too happened around that area. So because of the situation here, we cannot ignore the potentials that the sellers have in this market too as well. So scaling back down into the 1 hour time frame, for us to sell the GBPUSD at this point, we might likely be seeing a retracement of the impulsive move that started this week anytime soon. Remember, price action has been bullish since the beginning of this week. So we have this impulse leg here. And since price action is trapped within a range right now, we might likely be seeing profit-taking activity, which will reflect on the chart as a retracement into the golden zone area, which I've identified between the 1.2440 level and the 1.23800 area. So this is where we are going to be looking out for opportunities to probably do another wave of bullish momentum. So if price action breaks down the 1.252 level, we want to be in for a bearish move. So I want us to scale down into our lower time frame as soon as price action breaks down the structure, to look out for selling opportunities to join that decline to the downside. So let's be on standby to catch this opportunity. Now, with the situation we have here figured out, we want to consider the potentials that the buyers have too as well. Of course, price action has been bullish since the beginning of this week, and because of this, we cannot ignore the potentials that buyers could still come in again to break out of that resistance line at the 1.25400 area. So because of this situation here, we can afford because we've already been profitable on the GBPUSD so far this week, so we can leverage on the profit we have made to place a buy stop order above the structure to test waters and see if a breakout of the structure will incite another wave to the upside. So with a buy stop order above that area, we want to have our stop losses somewhere around the 1.252, which will be dovetailing to a maximum of 220 pips stop loss on this one. And if you are a cautious trader, you feel, okay, I want to be very cautious about it, I don't want to jump in, well, I suggest you wait for a retest of structure in our lower time frame to feel comfortable joining the bullish momentum at the breakout of the 1.25400 level. So that is how we are going to be looking at trading the GBPUSD for today. So we have a simple setup that will be guiding our trading activity for today, which is wrapped around the 1.2540 level and the 1.252 area, emphasizing the level of indecision and even giving us a clue into how market participants are anticipating the NFP data coming up in about an hour from now. So that is my view on the GBPUSD for today. If you have any questions, feel free to let me know in the comment section, and trust me, I am willing to be of help in that regard. So let's move on to the next pair. I can see some comments here. I saw something from 6422. 6422 says, please via XAUUSD. I'm not sure what you mean by that. Is that via, or you want me to treat XAUUSD? Please let me know in the comment section, if you are still around, what you mean by that. And Cast is asking that Euro USDF in after Androids. Well, I'm not sure I understand what you mean by that, Cast. If you don't mind, kindly rephrase that statement so that I can understand what you're trying to say there. Okay. All right. So with that being said here, let's move right into the next pair on our list, which is the XAUUSD, and that is the gold spot. The gold spot is also another profitable trade for us in the last 1 week. And remember, we have been buying the XAUUSD so far this week, as you can see here. Let's scale down and see how the week started for us on the XAUUSD. So at the beginning of the week, we saw this demand zone just right around the 1,940, which we saw how sellers found it difficult to break through that structure. And because of this observation here, we were anticipating buying opportunities. In addition to that demand zone here was this choppy situation at the beginning of the week, where we saw our price action was ranging between the 1,947 and the 1,940. And because of this situation, you know how we do it. Whenever we have a flat channel like this, we want to see price action break out of the resistance line to give us an opportunity to buy, or the breakdown of the support line for an opportunity to sell. And though we had a sell opportunity where we saw price broke down that structure, and if you had followed our rule here, whenever price action moves significantly in your favor, you move your stop loss to secure your position. You would have been taken out at the worst case scenario at break even. So with a buy stop order above the 1,947, this was at this point we had our first buy position for the week, and since then price action has been finding higher highs and higher lows. And to further emphasize this, we identified a trend line at the beginning of the week, and this trend line has been helping us to guide our trading activity throughout the course of this week. And as you can see, as long as price action remain above that trend line, we were looking out for more opportunities to buy the XAUUSD, and this led into the breakout of the neckline of our key level, which was the 1,960. And if you remember what I said yesterday about the 1,960, I said this level had been a major demand zone in the past, and that if price action breaks out, retest that structure, we are going to be back within the buyer's territory, and anything above that area should be giving us more opportunities to buy. And this was exactly what happened during the New York session yesterday. We saw the breakout, retest of structure, and price action moved significantly well in our favor. And price action has hit our TP target at the 1,980. Remember this level we identified at the beginning of the week. And since price action tested this 1,980, we have been noticing a choppy situation around this area, which further emphasize the level of indecision in this market. And like I've been saying earlier, this is more or less in anticipation of the NFP data coming up later today. So we are looking forward to see how the market is going to anticipate or react to this event. And you know how we do it whenever we have this kind of simple flat channel. We want to wait patiently for structures to mature in the form of either a breakout of the resistance line for an opportunity to buy, or the breakdown of the support line for an opportunity to sell. And with the situation we have right here, we don't have any positions running right now. So let's remain patient and see how price action will be reacting to the structure. Now, since we are profitable on the XAUUSD so far this week, we can still leverage on the profits we have made to test waters at the resistance line. So in that regard, I'm having a buy stop order above the $1,982.75 level to capture that move to the upside. And if we do have price action retest that structure at any point in time, followed by buy pressure above that structure, we shall feel comfortable in adding more buy position to our existing trade. So this is how we are going to be looking out for buying opportunity on this one. And as regards to selling the XAUUSD, probably in an attempt to do a retracement of the impulsive move that started this week, then the support line of this channel we identified will be a center of focus. And what we are going to be looking out for here is a breakdown of the $1,975.50 level. Now, one thing here is that we don't want to get too excited at this point, so we are not having a sell stop order below the 1,975. Instead, we are going to remain patient, waiting for structures to mature in the form of reflecting on the chart in the form of a retest of that area. So we could see a retest of the structure and then followed by selling pressure to give us an insight into the strength of the sellers. And we continue to join the bearish move if that happens to the downside. And we also have a key level here at the 1,970, which also shares a confluence with that bullish trend line that has been supporting the bullish momentum since the beginning of the week. So if we do have a breakdown of those structures, then we'll have no other choice than to look out for more opportunities to sell the XAUUSD for today. So let's be on standby. Anything that happens here that is a breakout or breakdown of this channel that we have here is likely going to be a very strong move to either side. So my advice here is that we remain patient and wait for structures to mature. So that is that on the XAUUSD for today. If you have any questions whatsoever regarding what I just explained here, feel free to let me know in the comments section. If you have any question, please let me know, please. So I will be taking the next 10 to 15 seconds to read through the comment section to see if there are any questions before I move on to the next, and I think our last pair for today. Okay, Jankra Sentis, good morning. Thank you very much. All right, so I think on this note, we just move on to the next pair, right? So the next pair we shall be looking at, which is also going to be the last pair for today, is the USDJPY. So on the USDJPY, since the beginning of this week, we have been selling this pair. So let's run through how the week started for us on the USDJPY. So we saw here at the beginning of the week where price action was a little bit choppy and caught within that range between the 140.920 and the 140.530 area, and because of the situation, we never saw a break above of that resistance line, hereby negating the potentials that buyers could come in. And because of the breakdown of the 140.530, it was at this point we started considering selling the USDJPY for this week, and we continue to ride the move all the way to the downside. And in fact, we have a trend line which has been supporting this bearish momentum, as you can see here. So price action has consistently respected that trend line, hereby pushing price to the downside. Now, during our live session yesterday, we acknowledged this, and what I said here is that we are going to be using that bearish trend line to guide our trading activity. And for the fact that we had the trend line figured out, we said as long as price remain below the trend line, we remain bearish, but if a breakout of that structure happens, we want to be bullish. But that never happened. We saw how price action continued to the downside yesterday. But one interesting thing happened here, and for those who still have a sell position running right here, I think it is right high time that you moved your stop losses to that area between the 139.120 and the 138.950. That is for those who still have a sell position still running in this market. Now, with the situation of things right here, how do we intend to take advantage of any potential trading opportunity today? Well, the first thing I observed on this chart this morning is that as soon as price action got into that 138.700 area, we have been noticing buying pressure coming from that area, and this gave a strong resistance for against the sellers, as they were unable to break down the structure. And as a result of this, I labeled this zone as a temporary demand zone. Now, with this situation here, the question here now is, will this zone here become a platform that will incite a bullish momentum? Well, if that is going to be the case, what structures are we going to be looking out for here that needs to be broken to the upside to confirm that this bullish momentum is valid? Well, from the current structure here, and considering the fact that price action has been bearish, remember we have a bearish trend line, which, as you can see here, shares a confluence with the 139.120 area. So I would rather see price action break out of both the trend line and the 139.120 area for me to start considering buying the USDJPY for today. So that level will be serving as my neckline. I look out for more opportunities at a continued buy pressure above that level to join a trend continuation to the upside. That's how I'm going to be buying the USDJPY today. However, if price action drops below the 138.700 level, retest of the structure, then I will want to start considering selling, as this will have taken out all the buy position along the 138.700 and the 138.500 area. So that is how we are going to be selling the USDJPY for today. Now, I would also like to share with you what the nature of the structure is looking like from an holistic point of view, so that we can also have a better perspective into what is going on here. And for the sake of those who are not part of our previous sessions, we can all be on the same page together. So right here, I'm going into the 4 hours time frame so that we can see things together from the same perspective. So look at the 4 hours time frame right here. So this is the 4 hours time frame. And one thing we observed at the beginning of the week is the fact that price action has been bullish since the beginning of the month of May. And to further emphasize the strength of the buyers here, we were able to connect the series of higher highs and higher lows to give us this ascending channel you can see on your screen right now. And in fact, this trend line, this channel has been guiding our bullish momentum since the beginning of last month. Now, something interesting happened during the later part of last week's trading session, so I would like to zoom into that structure, and that is exactly around the 140.750 level. So what we saw here was that as soon as price action tested the 140.750 area, we saw a sharp rejection. We saw the presence of sellers, and one interesting thing about that area also is that it shares a confluence with the resistant line of that ascending channel. And what we projected at the beginning of the week is that if the sell pressure continues below the 140.750, we are likely going to see a situation where price will drop down into the support line of that ascending channel, probably in an attempt to incite another wave of bullish momentum, or even probably break down the structure to incite a sell-off in this market. And with the look of things here, price action has been falling the way we projected, as we saw price action drop down with about over 180 pips to the downside on the USDJPY. Now, something interesting has happened here. Like I showed you earlier on the 1 hour time frame, we have been noticing buy pressure around this area. Very, very important to take note of, as this might likely be a platform for a strong bullish momentum. Now, another thing here is price action broke down the support line of that ascending channel. Now, the question at this point is, will this breakdown turn out to be a true breakdown or a false breakdown? And with the appearance of buy pressure around this area, we might likely be seeing a false breakdown here, where price action has a high tendency of climbing back above the trend line of the support line of the ascending channel to incite another wave of bullish momentum. So we want to be very, very careful here. That is why I said I want to see price action take out this bearish trend line to give me a confirmation that we are going to be going bullish in this market today. So let's keep this in mind. Let's mark this out on our chart and wait out for this opportunity to mature before joining any bullish move from that point. And if it so happens that this demand zone here that we identified in the last 24 hours is broken to the downside, then the breakdown of that support line will have turned valid. Then we look out for selling opportunities at the retest of structure to join that move to the downside. So this is what we are going to be looking at to guide our trading activity today on the USDJPY. So we already have a simple structure on the 1 hour time frame, which I would love that you mark it out on your chart, as we want to be using it to guide our trading activity for today. So let me zoom in and show you, so that for those who would like to screenshot my screen. So we have it around here between the 139.120 and the 138.700 area, where the breakout of the resistant line will be giving us an opportunity to buy. And in fact, a breakout of that level would have broken out of the bearish trend line that has been supporting the bearish momentum since the beginning of the week. Now, a breakdown of the 138.700 with a retest of structure should be confirming an opportunity to sell the USDJPY for today. So let's be on standby to catch any of these opportunities today on this instrument. So on that note, I want to call it a day here on the X-Trend Speed Live. I hope we were able to catch one or two things, especially for the newcomers, and I'm very confident that we are ready for the New York session, as we were able to simulate all the potential trading opportunities in this on this chart and this instrument that we have been monitoring so far this week. So I'm grateful everyone for being around with you guys, and I wish you best of luck during the New York session today. And please remember that we have an high impact event coming up in about an hour from now, so ensure that all your open positions are well secured by moving your stop losses accordingly to lock in the profit, as anything could happen. There is a high tendency that we will have volatility in the market at that point. So let's keep this in mind. I wish you best of luck today, and I look forward to seeing you on Monday as we get prepared for another new week on the X-Trend Speed Live. Do have a wonderful evening, everyone, and a blessed and merry weekend to you all. Bye-bye.